Testing, testing, testing. JB here. May 3rd, 2022. Hope everybody's doing outstanding on this fine afternoon. 55 minutes to the close. Just getting on really quick. I haven't been on the audio since last week, but not much to talk about. Yesterday was interesting session, similar to last Monday where we had the meltdown into the afternoon and then the big reversal. I think it was like the 56th time that it happened last Monday where the market was down over 1.5%, only to close up over 0.5%. Similar situation yesterday. The difference was the rally started at 2:45 in the afternoon. So we waited a little longer for the magical hand to come in. No true catalyst. There was no news. There was no any catalyst that one could look at that would cause that spike. Just found support right at 205 or so, 405 or so on the SPY, and then bounced. And then last Tuesday we had the big meltdown. So markets opened higher and just melted for the rest of the day, closing down 2+%. A little concerned that we're going to have a similar situation here today. We still have an hour left in the day, but we are still in the green. So I guess that's a good thing. We'll have to see how this all closes out. But not an environment where you try and hold on to long-term positions. Or let's say, for example, you were in puts heading into Monday. You were looking great into the afternoon. You go to the bathroom, you come back within the next hour, your premiums are destroyed. So I'm not saying there's not opportunities to make profits on puts on a short-term basis. It's not how I like to trade, and you have to be very strategic and quick to pull the trigger when you see things reverse. Otherwise, it's very easy to decimate one's account. All right, so that's the SPY. Take a look at that. So the 405 area, I was looking at 420 the last couple of weeks as well. So if we can get back over 420, I think that bodes well. And then we have the Fed meeting tomorrow. It's pretty much a foregone conclusion. It's going to be a half-point rate hike. Anything more, maybe there'll be some volatility, but I think people would actually like that. A little more aggressive from the Fed. They've already been setting the tone up for their hawkish commentary has kind of set the tone for a surprise. And if it's a surprise 0.75 three-quarter point rate hike, I don't think that would be a bad thing. So we'll have to see how that plays out. You have the statement as well, and then you'll have the press conference. So Powell will have to ease concerns, and maybe we hit the inflation top, the plateau this last quarter, and maybe that's the start of a reversal. And then people say, oh wow, the rates are starting to have an impact, or at least the commentary from the Fed has helped pare back the inflation. We'll have to see. And then also we have the concerns about a recession. I think it's another kind of peel off the Band-Aid moment. We had negative GDP. The first read on Q1 GDP came in negative, which was a surprise. And now I think it's pretty much not going to be a surprise if we have a negative read for quarter two and we get the recession out of the way, which we already had in 2020. So it's not like we didn't just have one. And then we can move on. And hopefully they can start normalizing, Fed can start normalizing their policy. They take away the punch bowl a little bit, and then maybe the market finds some footing. So that's the SPY. Some names I've been looking at in Friday. Zymeworks was one of my top 5 stocks a couple of years ago. A great story. Has quite a few collaborations with some huge biotech names. So some of my thought process in being bullish to name was that I think at some point they'd be on the targets for an M&A target. Sure enough, what happens Thursday after the close, there was an unsolicited buyout offer from, I forget what the name of the company was, $773 million buyout. And then this afternoon, I guess a stakeholder in Zymeworks, All Blue Capital, said they support the buyout offer, and as long as someone gets put on the board, blah, blah, blah. So I think this sets the stage for the stock to head over $10 in the coming days. And I think almost if the company spurns the offer, I think the stock will head even higher. So, of course, my calls need to you need to get over $10 to make any money. And also, I would like to make more than 50 or 100%. So I would love to see it be 15 or $20. So who knows? Hopefully, maybe they come back with they spurn the offer, or someone else comes in with a higher offer, and that thing really starts to take off. But I'm just surprised it's down here at nearly 6 and change, nearly $7. But then you look at a lot of these names out there that have sold off quite a bit, and you can say the same thing for so many of these small cap biotech names. So that's that. All right, I'll be right back, folks. I got to get off for a second. Sorry about that, folks. I'm back. All right, so that's kind of Zymeworks in a nutshell. Just going to continue to hold my calls. I'm not going to add anything, but I'm just surprised it's down here. But then again, you look at all these other charts and names that you think some of these biotech names that someone posted on, I forget where it was, but there's like 57 small cap biotech names that trade less than cash, meaning let's say it's a $200 million company and they have $250 million in cash and no debt. So it's like those are the situations we're in right now in the biotech space, where you would think logically, hey, someone could just acquire that company for 200 million and then pocket the difference. That's kind of the situation it's in. So some of the stuff really doesn't jive, but I think hopefully stuff starts to work out. Market finds a little support, or at least the biotech space, and maybe some of these names will, a couple acquisitions and probably will switch the narrative in the biotech space. All right, so on to Expedia. And I was only watching Expedia because TripAdvisor is one of my stocks that I like to watch, only because I think it just, similar to Roku, it just doesn't make sense considering it's the top trafficked travel site on the planet, 400 million unique users on a monthly basis. It's got to be more than that. And they can't even crack, I think they do $500 million in revenue. Let me just take a quick peek because I haven't looked in a couple quarter. Well, last quarter I looked, and I haven't looked at the recent quarter. So let's see if I can find it here. Oh, $900 million in sales. So I mean, for every monthly user they have, it's a dollar, $1.80 or what have you per user. Just doesn't make sense. The good thing is the CEO is finally stepping down, and now they're going to have new leadership, and maybe that's the tipping point where they start to, figure out a way to monetize their base. Expedia reported great earnings after the close yesterday, yet the stock got destroyed. It wasn't getting destroyed after hours, nor this morning, but right after the open, people sold it off. I guess there's just concerns. I didn't even read the exact. The analyst commentary seemed bullish, but here it is down 13%. So I don't know if there's a read through here on TripAdvisor, but you have to think all this pent up demand from the pandemic, where everybody was afraid to travel. Now you have the mask being removed from travel when you're on a plane. Once some of these restrictions from traveling abroad go away, whether in Mexico or Canada or even in Europe, maybe that just accelerates the travel situation. If you try to look at tickets or travel anywhere in the United States, some of it's pretty crazy, especially with spring break recently, and now you look at the summer. I'm sure that's just going to accelerate. You have to think some of these names are going to benefit. TripAdvisor, Booking.com, Expedia. Yet here's Expedia down, Booking's following in sympathy, and TripAdvisor reports Wednesday after the close. I don't know if I'm going to take a flyer on TripAdvisor, but it's definitely one of those names that I think could, if it starts to get some momentum in terms of monetizing its massive user base, I think it's into the mid-30s, 40s, if not higher. They also have their Trip Plus program they rolled out last year, which maybe that starts to bear fruit. So that's a name I'll be watching into earnings tomorrow. Carlytics, another name, reported earnings after close yesterday. Here's a company that's probably has one of the most data-intensive libraries of anyone out there. Pretty much can track over 50% of the credit card swipes in the U.S. and now internationally in the U.K. as well. And then, the stock's got destroyed since, even just the last couple of weeks. Just crazy where it's down here in the 37.50 now. Just a great story, and they have partnerships with all the major banks, and they also have partnerships with the people who want to provide services, goods and services. So if you don't know the whole Carlytics story, you log into your bank account or your credit card account, and then there's offers in the bottom right corner over to the right saying, go to Target, save $5 per $20 spent if you use your Chase credit card or your Citi or Wells Fargo, what have you. And pretty much Carlytics is setting up that partnership between the credit card company and the let's say it's Target or a gas station or a restaurant or what have you. So they get a cut of the pie, and then the other two benefit because people are going to use the card more, and the vendor is going to get more spend. So, and not only that, Carlytics can pretty much guarantee that you're going to get a 5-to-1 return on your investment when you spend advertising dollars on their platform if you're a partner. So just a great story, and it's sitting here at, it's 37.50, only up 4% today, despite a huge beat and nice guidance. And not only that, similar to Expedia, it's going to benefit because a lot of their partnerships are with restaurants and travel, so hotels, things like that. So if there's any segment that's going to grow leaps and bounds over the next quarter or two, it's definitely travel, leisure, hospitality, things like that. So Carlytics, I was looking at the 50s. I didn't even look right now what those are right now. But they definitely were too expensive for me. Oh, maybe the 50s at 25 by 35. Maybe tomorrow I'll visit that, depending. I'll have to see. But definitely an interesting story over the next couple of weeks if the market finds some footing. So that's Carlytics. And let's see here. Some other names. So Boston Beer yesterday. Crazy move off. I think it was 325 when I got the calls. It's post earnings. The stock went from 325 all the way up to 395 yesterday. I didn't want to see any of the last of my profits disappear, and the position was up nearly 500%. So I closed the rest of my calls. Definitely going to revisit at some point. The 50-day moving average, I think, is 378. So it broke and held over that yesterday. It's just that it's up so much, maybe a day or two consolidation, and I can look to add some more calls on that one. A ROKU, God, just a baffling move this afternoon. I wouldn't say baffling, but here's ROKU. So when you look to invest in a company, ROKU's, they're margin-rich company if all they do is monetize their platform. If all they do is provide ads and take a cut when people sign up for HBO Max or Hulu or whatever on their platform. Instead, now it looks like they want to do this content. And they have their free Roku channel already, which is subsidized by ads. So if you want to watch, I don't know if it's Forrest Gump's available, there's a lot of movies available on their free Roku TV channel because it's monetized from the ads. So the ads subsidize the content that's on there. But now it looks like they want to, report out at 2:15 today or 2:13 that they're going to partner with Apollo to buy a stake in Stars. So that's kind of the game. Unless they think it's on the cheap right now because of what's going on in with competitive landscape with Netflix and all these other streaming content that's out there. Maybe they think that this is cheap compared to where it was a couple years ago when Stars was mulling a spinoff. So I get that, but you just don't want that kind of debt on the books, in my opinion, for Roku, right? To me, Roku, get the platform in everybody's house, and then just let everybody get on that platform, create an environment where that happens, and then just monetize the heck out of it. So we'll see what happens. The stock pulled back a little bit. I was posting in the chat room right when it was at 105, 106, that if it held here, I was going to get some calls to add to my other calls that need a huge move regardless. But maybe tomorrow we'll see how this all shakes out. But I just don't get that to me. But we'll have to see. Anyway, I think that's it, folks. I'll try and get back on the audio later. Sorry about the little interruption. Let's have a great day. Rock and roll.